what I wanted to do today, and I was talking to some of the guys who just recently been on a career course about this, and it got me thinking, because we talked through how to go about preparing yourself for the morning. I thought, I know what I do. I thought I'm going to actually get it down in terms of questions, things that I actually do sort of look at. What do I consider every morning? And so go through sort of an approach to how I break down the market from a technical point of view every day. You know, this leaves aside the sort of fundamental picture, the idea of when you come in the morning, what trades you have perhaps immediately straight off. You know, I've left that. We discussed that in quite big detail during the course, but what I wanted to do is sort of have a little look at, and I thought this help everyone. What questions do you want to ask yourself? Because it's all right just observing a chart and going, that's an interesting point. There's a candle, there's a previous high, there's whatever. What you need to be doing is asking yourself a question: what's the significance of this? What does it mean? Does it give me a trade? Does it give me an idea? Does it build up on a general context? Because not every candle necessarily tells you a great deal. It, you know, perhaps just says to you, well, we don't have anything changing from yesterday, so therefore we just continue as we are. Not everything has to mean a massive amount. But the questions I go through, just sort of tick them off every day, just then starts getting you thinking along the lines of where you actually want to be going for the day, where you think your trade opportunities actually are. So we'll start off, and this is how I go through all my charts. Start from the top and move downwards, basically. And candlesticks for me, extremely important. I'm a massive fan of profile, as I'm sure many of you know, but candlestick ultimately is what tells you where the market is going. That's where you can see the overall trend. A profile is going to tell you a lot more about the day and a lot more about how a market is moving within that trend, but ultimately the market's trend, the market's direction, and how the market is doing things comes from your candlesticks. So first question, simplest one that you're going to get: was yesterday's candle bullish or bearish? So this is the DAX. I put this together this morning, so you can see we hadn't actually yet traded below 12,531. Was yesterday's candle bullish or bearish? I'd say that's quite a bearish candle. This little red, almost an evening star candle, and as many of you know, or if you do follow the DAX likes an evening star. Got a fair few of them around here, often calling highs lows. Doesn't necessarily have to mean, you know, as in this case, that it calls a massive high and we're going to get a huge drop. But first thought is, with a candle like this, we've got scope to start coming off this market. Next up, I'm going to be thinking about what the volume was like, because even if we have got, you know, something a little bit interesting, you've got this evening star at the top of this little move higher, have we actually got any volume that's going to help this out, or start to give us any idea of whether we've got any kind of constructive moves? Now, if I just roll this down, what you can see is recently volume has been pretty poor in the DAX. So what that's saying to you straight away is that any moves, even if they do get going, perhaps a little bit less likely to really sustain, because of the fact you don't have the amount of volume trading through the market at this moment. For about the last 2 weeks, we're struggling to see much over 600,000 in the DAX. I've got a longer term moving average on volume, which I'm not a major fan of, but you do want to see, you know, volume above that moving average. At the moment, that moving average is just under 750,000. DAX has not managed to touch that for about 10 days now and stayed significantly below it. So at the moment, volume's not looking great, which suggests any moves are going to be a little bit harder to read, a little bit harder to stay on, because you're not going to get this sustained pressure in the market. Next up, or next question I'm looking at is range. So what I'm trying to look at, what I'm trying to answer there, when I'm talking about range, is what's the current range? What's the average range at the moment? And again, with this much lower volume, you are seeing, once again, DAX the blue is the range, the gold or sort of darker colour is the average or the ATR, so the average true range. At the moment, DAX is struggling, and again, another 10 days passes and we've still not once gone beyond the ATR. So even though Monday's move up did look quite significant, still didn't actually beat what you consider a normalish type day anyway. So we're seeing lower volume, smaller ranges. That then starts to help you out in terms of your expectations on the day. It's unlikely to be a massive day today. It's unlikely to see huge volume that's going to drive the market forward. Okay, and then the other questions that you don't necessarily, and when I sort of trying to put this into a process, it's not necessarily that I will answer these questions every morning in that order, but you want to know what the current trend is and what the general direction is. Current trend in the DAX is up. We've come from these lows, we've started to progress higher, we ranged, and then we moved up. So current trend is definitely up. However, with yesterday's bearish candle, potentially could be coming to an end. What's the general direction of this market? Well, depends on your time frame. If you take this back much wider, put this on a 5-year chart, you'd say definitely up. At the moment, this is going pretty much from the beginning of this year. I would suggest that general direction is very much sideways. The market doesn't really have any clear overall direction, I wouldn't suggest. Until we start getting out of this range here, we don't really have any strong direction. So pretty much sideways would be the general direction I'd be looking at. So suggesting that you're not going to get any significant moves. When I say significant, I mean sort of breaking out of key areas for the time being. So next up, what do we look for? Profile. This is where it's going to tell you a lot more about where your opportunities lie, where you've got a chance at a trade. First question, what was the day type yesterday? Day type yesterday, that looks a pretty normal day to me. For those of you who study profile, what a normal day is a day that looks very balanced. We trade both sides of the initial balance, reasonably tight value area, reasonably consolidated trade. So day type was normal, but it was normal extreme in that the close is outside of value. This is a sign of weakness. Not a massive sign of weakness, but it is a sign of weakness. But adding that to the already slightly bearish looking daily candle, you started to build up a picture of what's going on. So that was first up in terms of your day type. Now, who was in control yesterday? With a normal type day, no one really. This was very much a consolidated day. So you got probably as many buyers and as many sellers. Market's very comfortable where it is. So profile's not really telling us too much there. However, we can start looking at a few little references on this chart. And so you're looking for, in the next two questions, where does direction change and what references or clues have we got to any potential change? So first little clue you've got is this weak close. That's suggesting that if anything, and this is more a reference, if anything, perhaps we could come off. On top of that, you've got this rejection. Now, move doesn't end without some kind of tail, which is why looking at that candle, or that day, sorry, on Monday, you look at that and think that's probably not the end of this move. Now, what I don't want you to do is take that to mean it has to go higher than that the next day. It doesn't, but what I would suggest is that over a period of time, this is unlikely to remain the high. So you've now got this rejection. So that's giving you a little bit of clue. We do have rejection to the downside as well though. So again, reference wise, you've managed to find buyers at lows, you've managed to find sellers at the top. I would suggest this rejection is more significant though. It's the beginning of the cash session. It's also rejected the highs of a move up, whereas you're not completing any move with a move down here. With a move up, you are completing the move potentially. You push on higher, you find sellers, and the market rejects lower. Beyond that, we've not got a great deal of other clues in this market. What I'm also looking for though is, as I say, where does direction change? Where could we start seeing the market that starts to change in the way it's moving, changing where it's going? And for me, this is where you're going to be creating your line in the sand. That's the point that you think that any move perhaps to the upside is not on anymore. And this, for me, is the area. 12,508 down to 12,490. Oh, sorry, excuse me, 12,498. So basically from the profile, yesterday's lows, single prints, low volume, midpoint. That's what I'm looking for. That's the point that I feel if we can get below, this market then changes its direction. Reasons for this: after consolidation, we should then find buying to continue higher on the back of a move up. You'd say the same the other way around. You find some selling as the market moves higher to then progress lower. If we get down here, this is where clearly you had some initiative buying, took prices out without any trade back, didn't let the market come back. Buying then establishes higher up, which is why you then get the build out volume up here. So if we can get back below here and not find any buying, this market then does look like we have potential to move lower. To the upside, where do we start thinking about buying opportunities? Once we can manage to escape value, once you can get into these single prints, that's where we can then start thinking about a move to the upside. So that's what your profile is giving you. It's giving you an idea of where things change. Now, it's not to say that you have to execute trades only in certain areas. That's where you use the shorter term time frame charts, and we'll move on to that in a minute. But what it's suggesting to you is it becomes significant once we're outside of this area down here, outside of this box. Equally, the move becomes more significant once you start trading into this tail and this wick. Okay, so we're starting to build up a pitch from daily candles that perhaps this market's not quite got the strength in it that it did have. We've got a weak close, we've got a rejection, so potentially we've got moves to the downside. However, this move up doesn't change until we get through our line in the sand. So until we get in towards 12,490, 99, 98 area and push below that and stay below, we're not going to get a continuation move. So I'll move us on now to your next time frame. So depends on your market. With the DAX, I pretty much use a 60 and a 5 minute as my two main short-term time frames. If you're trading a market that's a little bit slower, say Bund for example, you might be looking at a 60 and a 15 minute. Euro stocks for me, I don't usually go anything below a 60 minute because it's that much slower. So vary it depending upon your market, depending upon its volatility. So next up, like I say, we get down onto a 60 minute chart. I've got questions below on this one. This is where you're starting, or you're trying to build up an idea of the structure of the market. So this is where you sort of bring it down to only really looking at the recent move. The general move you understand now, that until we get out of certain areas, much wider range, we're not going to get any significant movement in this market. So look at the more recent move. What's been going on? If you've been doing your debriefing and getting down these reference points, facts about the market, a lot of this you're going to know anyway. So recent move up, we've had a breakout of this old range. We've then moved up and consolidated. So that was yesterday's moves. We're now sort of trading in the early part just within yesterday's range. So this is your breakout after move down, break higher, consolidate, break up again. So that's looking like a pretty decent start type move. What you're trying to establish as well from your hourly chart is significant levels within the scope of what you could do. i.e., you've looked at what the current ranges are, you've looked at the current ATR, which is around about 120 ticks, but last 10 days you're struggling to see range much over about 80 ticks. So you started thinking, right, well, how far could this market stretch? Where could we reach to? To the upside, you've got this gap fill, which comes in at 12,672. We started off this morning at 12,550, so that's around about the ATR. Could you expect much more than that? Probably not on a day like today, probably not with the current conditions. So therefore, this now becomes an area that, one, you could start to target, but two, potentially does offer you a little bit of a short-term trade. Likewise, to the downside, significant areas move back towards this old range. That's going to drop the market around about, again, from the open, 120, 130 ticks. Again, probably around about good enough to call it potentially the end of the move. You've also got a close in the middle of this range, which comes in at 12,398. So that makes it 150. That close then does start to look pretty significant. And these are perhaps your two wider targets. What this serves to do is just remind you of how far the market could go if it does start to move. You know, rather than it starts going and you start thinking, oh, I've missed a bit of the move, I might have a go at fading it, things like that. If it starts to go, also if it starts to go and you're on the move, you can remember that actually there's a fair bit of movement in this. You've still got scope for, you know, if we start breaking through these areas, there's still 75 ticks to the upside that you've got as potential on that trade. So by establishing these larger areas, you're setting yourself boundaries for how far you think the market could go, but you're also allowing yourself to hold on to trades in terms of how far you think the move can go and letting it play to those areas, rather than seeing the first little area, perhaps this top of this little gap, and going, oh, that's a decent move, I'll get out there. If you know the way the market's structured, you know that there's this gap up here. If we start trading into this area, we could very well go and fill that, and so you can then try and hold on to these moves. And this is my whole point about structure. What you've got to try and do is answer a few questions about structure in terms of, does the market have a good foundation for what it's currently trying to do? And what I mean by that is, and this is perhaps a pretty good example of it, the foundation for this move looks pretty good. We've come off, we consolidate and drop lower. Then after consolidation, we fail to continue the move, bounce back up, and then we start to range a bit. So we consolidate this move and then move higher. That looks like a reasonably good base for a move. Whereas if this had come on the back of drop, consolidate, and then just trend, that would look like a less solid foundation for the move up. Yeah, to start with, I think the drop, consolidate, turn and up would look okay. But the fact that it then doesn't build anything else before the continuation would suggest that it's perhaps not as strong a move as you might think. And that would move into question two. Is the market overstretched? That would be an example of it being very overstretched. It's managed to just turn off a low and just accelerate straight up. Market with good foundation is going to do something along these lines, which does make this move look quite good. Meaning that if we do drop back down, we've still got potential to move higher. The other question you want to be asking, could this structure break? And that's the kind of question you want to be asking, particularly when you're in a very consolidated phase. That's the kind of question that you'd be asking here. Could it break, and where could it break from? That way, again, you're ready for it when it starts to move. Yeah, if we start to break out of this area, you're thinking, right, well, we've spent some time consolidating. This isn't too much of a surprise to me if we start to pick up pace. And that's where, again, having those areas that you believe could be targets allows you to stay in for some of those moves. So that's your structure side of things. Then move it finally onto where you actually get your trades. And this is where I'll move it down to a much shorter time frame. Looking down towards about a 5-minute time frame for the DAX. On this, what I'm trying to do is pick the points where I feel that if we get out of certain ranges or we start breaking certain smaller levels, that's where potentially you've got the entries on these trades, or that's where you're getting clues that we're moving in one direction rather than another. So this is the 5-minute chart that we got over the past couple of days. This basically is Monday, all of Tuesday, and then the early part of Wednesday. So a few things to be noting. Like I say, if you've done it on your debrief, you'll know that the delta was pretty low yesterday. Minus 800, however, this was countering Monday's plus 800. So it does add slightly more to that picture of weakness in the DAX. Okay, so what you're trying to ask yourself first though is where can trades be entered, and also how a trade's likely to play out once it gets going. Just got a question from Peter. What's the charting platform you use? I use Investor RT. I've used that for best part of about 5 or 6 years now. It used to be Market Delta. When Market Delta got bought by CQG, I moved to Investor RT, which was the sort of original platform for it anyway, what Market Delta was originally built on. So what I'm looking for is where you can enter a trade or where a trade's likely to start moving from. So for me, for the DAX this morning, we're opening middle of yesterday's range, opening right in the middle of yesterday's value. These lows, 12,532 was the first area I was looking at, and then top of the range, it's not 469, it's 569 to 73 was the areas to the top. Once you got out of there, that to me was, from a short-term point of view, at least giving you a clue as to where we could then start to move from. So once out of that, and we did manage it this morning below those 32s, you're then looking, right, well, where can we go down to? That line in the sand for me was coming in, whoops, right around here. That was sort of my line in the sand. What I did have noted was these secondary highs just below 12,489. That's something that I'm just a big fan of as a shorter term level. Is rather than this obvious high, that little high just before it or just after it is the next area I'm looking at. So that gives you areas to start taking a trade. Now, what you've got to start thinking, and that's the question on reaction trades, where do you have a little scalp trade? And those secondary highs do offer you a little scalp. Anyone watching it today, there's 190 lots sitting at 91, so just above that level. Also, you've got the gap fill, which comes in down at 12,398. Again, these are the areas that I'm looking at for small scalps, either of those two. So what you've got to be asking yourself then is, how's the trade likely to play out? And where are the acceleration points or sticky areas that you're looking for? Because you've got this high, secondary highs, these lows, this could become quite a sticky area for the DAX. So anything in here becomes an area, and this area, like I said, was really 08s down to, and if you take into the secondary highs, 89s. Anything in there is likely to be reasonably choppy. Once through though, that's the point that we've had the consolidation higher, we've broken the line in the sand, we could then see acceleration from there downwards, potentially all the way down to this gap. So that's what you've got to start thinking about from these 5-minute charts. At what point are we actually going to accelerate and actually really start to get the move going? That way, rather than playing it short through 32s and getting frustrated that you're getting a slow move, and then even when it gets down to the 08s and 89s, there's struggles and it becomes difficult to stay in. You're not surprised by that. You know that that's perhaps what's likely to play. But it does still mean that you can play the move from 32. You just do it with a bit more patience. By planning that and being ready for it, you're able to stay in and sit through that trade a little bit better.